Hey traders, it's Serge here. Today I wanted to look at two stocks, one of them actually being a long side play, breakout play, and the other one more of a short. So basically the way I'm looking at the market at the moment is that the broader market still is very much looking solid. If you look at the indices, the S&P, the Nasdaq, and the Russell 2000, all still very constructively positioned, as are a lot of individual stocks, of course. At the same time, some of them are starting to break down, so we're going to look at a couple of, or one stock particularly that's looking pretty heavy. First off, let's start off with Qualcomm, which I do think is again now poised for a move higher after the marginal breakout. We'll look at that in just a second, but for a little perspective, understand that the stock's been trending very nicely off of the July lows. Started then basing these two blue parallels, started basing in late summer into the middle of the autumn, then had a nice breakout and again began to consolidate over the past a month and a half or so. The stock then actually went down and tested its support at the rising 50-day moving average. That's this yellow line, and with two very bullish candles early this week, then on Thursday give it an 1/3 push that really broke it out of this consolidation area. So at this point, this is a stock that I think has really good risk reward to the upside. At the same time, it's going to be very clear if the stock is not ready to break out yet, because if it is not yet ready to break out, it will reverse right back into this area, in which case we just simply stop out of it and reconsider it whenever it can act like a grown-up again. For the time being, the stock looks good to move higher. And then the other side of things, of course, is the short side. If you look at, in this case, I'm looking at Decker. Decker's Outdoor. They make shoes. Ticker symbol DECK. The stock has very nice support line here, and the 200-day moving average being the red line, dating all the way back to November 2012. And then really started going a little bit vertical away from the nice orderly uptrend and getting too steep. And all that started with an up gap in October. The stock then kind of started feeling a little heavy, looked like it was consolidating once again in an orderly fashion. But I actually just started flagging the stock to my clients and subscribers late last week, as we had a couple of nasty down days, uncharacteristic for the stock. And then, of course, yesterday the stock flushed out right below the 50-day moving average, and it is now in a more meaningful, what I'm going to call a mean reversion move. For this kind of stock, again, immediate term, anything can happen. It can bounce a little bit, but more or less the stock looks like it has lower to go, test some levels a little bit lower, probably somewhere between $5 and $10 lower. Right now it's trading at 75.65 as of Thursday's close, but I suspect the stock could easily get into the very low 70s and into the high 60s, which would be even better technically, because then it would retest this uptrend line, the black trend line, as well as the 200-day moving average. So those are the two things I'm looking at today. I hope it makes sense. Take care.